All right, cool beans. So I got a couple questions. I only got four. Um, only got four questions. So let me pause that, move that out real quick. And so the questions we got was Zarai wanted to know can go over how to get in the trades. They say wait for the break and retest. What's the best way to get to have better entries? Deborah, you asked about explain TP1, TP2. Explain entry confirmation. That's pretty much the same thing as what Z was asking about. And then Thomas asked about divergence. Okay, cool. So these two kind of are pretty much the same, but I'll explain some different things. Can go over GU trade setup. Okay, cool. Okay, so I'll start with what Z was asking about. So trading, breaking retest, you're looking for breaks of structure, right? You're looking for breaks of highs or either lows of structure, right? And let me find a good pair. Let's do AUD USD. And let's see. What's going on in here? Oh yeah, I missed this trade. Oh yeah, I missed this one. Oh, I'm so mad. I missed that one. So I'm gonna clear this out. Yes, trade. That might be a good setup. I might have to come back. I'm not gonna clear this. So let's go to ACAD. Never look at this. And then let's get rid of everything. We don't need any of these. All right, cool. And let's look at some structure, right? So basically, when you're looking at or trying to determine what a break and retest looks like, let's assume that we had this high that's right here, boxed off, and we had this low boxed off right here. Let's stretch it out to here, right? And this is our area of structure from here to here. And given the circumstances, we will be looking to buy this break, and we will be looking to sell this break right here, right? And if you're looking for a break and retest setup, right? Now, there's some other areas we could look at, but let's just focus on, just looking at this particular high right here, right? And this particular low. When it's referred to as a break, right? You're going to want to see this happen, right? We're going to use some drawings, right? In this area right here, does price break above this level right here? And this is a question for everybody. Drop an answer in the chat. Does price actually close above this level right here? When it gets to this level, like only Thomas, no? Okay. So it's 29 people on, no close, right? No close, right? Does price break and close in this area below the sell? It does, right? So which one of these trades gave you an entry signal? This one or this one? The sell or the buy? Okay. And it looks like for the sell, you would have had a signal to enter this trade right here, right there, and right there. On any one of these candles right here, right? Even got another one. Oops. Right here, right? But over here, we didn't get that, right? Now, what about this area? Did the candle break and close below? Candle break and close below? It did, right? And then what about this area? No. Okay. Now, these two areas right here, this one, this one, this one you could have taken, right? But the problem is with taking this one is, you see the next candle, when it opened up, it only slightly pushed down and then it just rejected to the upside, right? Why? What would have been your reasons for getting in this trade anyway? Would there have been any signs that you would have thought that may not break and continue? What would you have used to kind of confirm that you should or shouldn't have taken this trade other than this single candle right here, breaking and closing? Is there anything that you would have noticed that would have made you say, this broken close, but it reversed and I would have took a loss on this? Lower wick. Okay. That's a good answer. The support. That's a good answer. Anybody else? Nope. Going once, going twice. Okay, cool. So you see how this candle, bullish engulfing candle, pushed back up into the zone. And then you had 1, 2, 3 candles that closed back above this. That's one of those signs that you're going to have to pay attention to when you're looking at candles like this, right? Because this has already showed you right here with these 3 candles in this area, well, these 4 candles right here, that this may have the potential to push back up, right? And then if we look to the left, we'll also notice it's bounced off of this area. 1, 2, and you can pretty much count these times as 3. Pretty much bounced off of this zone already. So you will want to keep in mind that if I do take this trade, I need to be a little patient with this candle, because if it's breaking and closing, it's going to give you some clear indicator that it wants to go down, like over here or over here. But even when this went down, it only probably hit the first target and then rejected back up once, twice, right? And now this time over here, this is a really, really clean indication that this is not going to go down, right? So a wick rejection at this level is always a sign this candle did not close below. It did not give you a following candle to break and close. And that's going to be a sign that, you know, this is a no-go, right? Another trick that a lot of people might not know and might not talk about a lot is, let's take this little area right here and assume that we were going to trade this area right here, right? On a lower time frame. I'm going to get rid of this line right here, but let's just assume that we were going to trade a break and retest of this level. There's going to be, I talk about it a lot. If you pay attention, you can use this, what I'm about to show you, as a sign of continuations in certain trades. Like if you're wondering whether or not a trade is going to continue or not, or if the trade is going to be a reversal, you can use some of these things, right? In an area where you have a wick on the downside like this, then you see that a engulfing candle is right next to it, right? So you're going to look for long wick in either direction and an engulfing candle to engulf that entire wick, right? This is called price delivery, right? And you're going to look for the price to rebalance between this wick, right? It's a really, really, really good way to know if something's going to break and close below and retest and go, right? It's a really easy way to see this, right? And you want to draw a line from wick, draw the line through from the bottom of the wick or the top of the wick through the engulfing candle, right? And then you're going to draw another line at the body of the candle that made the wick. And this is going to be your line, right? This is the line. These two, this area right here is the line in the sand, right? If once you see that this candle is broken, right? Let's say we broke the zone at this low, right? This is our zone, right? Once you see it is broken and you see the engulfing candle trade through, the next candle, when it opens up and it pushes up into this area, it cannot close above here. And as long as it does not close above here, you should be able to take this trade to the downside. You can start looking for your entries as soon as you see price on this line and anywhere in between here, anywhere in between, because sometimes it'll trade back up and above, right? And this only works when you see that you got a long wick and engulfing candle. And you're going to look for this rebalance and redelivery of price to continue to the downside, right? In a case like this, you could have did this in this same area, right? You could have had price, draw your line right here. Right? There's your line. And then we already got a line at the body. And when price opened up, right, it pushed down first, right? After it pushed down to this area, it rejected and pushed up, right? So now, once we get to this area at the close, well, this is the opening of this candle, right? If price pushes up above this area and closes above this area, it's invalid. That means it's going in the opposite direction, in which it did, right? You can see it happen over and over like this, right? Let me find another good example. Let's see one over here. This one missed it right here, but it pretty much, so Omar, pretty much did the same thing right here. It missed it. There was your wick high. There's the candle trading through it. This one came down to almost touch it, but that's okay. You'll notice that sometimes you'll miss it, but it gave you a rebalance right here on this candle and this candle. Sometimes it does that, right? And you would have been able to take this little wick up to this area. So that's a whole nother situation, but this is a sign of continuation that I mentioned earlier, right? Let's go to another spot on the chart. Let's go to another spot, right? And let's find a buy area, right? This candle right here, this candle broke and closed above our buy area, right? Pushed up. You would have had to be a little patient because it came all the way back down to entry and it rebalanced on this candle right here, this little small wick to this wick, and it gave you what you was trying to get from out of this trade all the way up to whatever level this is right here. Here's another example of if you were looking to buy right here, right? You're looking to buy right here and you were like, I want to get in when it rejects this level to go back up, right? But what happened right here, right? We had the wick rejection right here, 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 and here. But then what do we have on these candles right here? A rebalance. We had this wick get traded through on this candle. These candles pushed all the way down, but eventually we came back up and rebalanced the price out and pushed down to continue, right? You want to pay attention to these kind of areas, right? When you see wicks get traded through, because those are going to be signs that it's either going to continue in the direction and come back, pop this little area right here and keep going, right? So that was, does that answer your question, Z?
Yes, it did. Thank
Okay.
you.
Okay.
Yeah, it was, I didn't know that, what you just showed us. So, I mean, I always looked at it as similar, but not like that. So thank you. I really appreciate it.
No problem. Yeah, anytime you see a big wick, like even this one right here, you could use this one right here.
What's up, Cory?
What's up, man?
How's everything been this week?
Good, good. So
Yeah.
even this wick right here, you see the body right here. You see the high right here. Price never came anywhere near this. You know, it pushed up, pushed up. It finally traded through it right here. Traded through this wick. And then you had this candle come back down a little bit and then go from here. So if you missed this buy at any given point, this would have been at least the last chance you would have got out of that. So that's some little tricks you can use. And then let's see. Deborah asked about explaining TP1, TP2. So those are going to be your targets. And the way you find your targets is once you have your zones built up, you know where your zones are, you're going to use the chart to find your targets. So TP1 is take profit 1, take profit 2, and so on, right? The way you get those targets are once you establish that this is the zone low, this is the zone high, or whatever, vice versa, zone high, zone low, you're gonna take your cursor, right? This is my high. I'm gonna go to the left, find the first area of rejection. Take my cursor, find first area of rejection. This would have been my TP1 right here. First rejection, TP1.
So your rejections will be where you're going to be putting your take profits when you're marking up the charts. That's what
Yep.
you're going to be looking at.
Yep.
Okay, cool.
So this would be TP1, right? And then from TP1, I need to find the next area of rejection. So I'm gonna take my cursor up. The easiest way for me to explain is like, once you take your cursor up from where you are, when do you start hitting things, right? So if I went to the left, I could use this, but it's short, right? But then this area up to this body, that looks like a good target right here. So this would have probably been TP2 right here, right? You're looking for areas of rejection. I like to use bodies, wick rejections, and whatnot. Then if I'm going TP3, take my cursor, go up, look to the left. This little area right here between TP2, TP3 would probably be here. That's going to be my next TP. And because I'm on this particular pair, I'm probably only going to go with 3 TPs, right? On this, and we'll measure this. How many pips is this? 16, 25, about 25 pips or so on this. This is a slow moving pair. So you probably getting good if you get a TP3 out of this. You're gonna do the same thing for the bottom, right? So you're gonna take your cursor, go down, find the next rejection, right? This would have been my TP1 right here. Then in this case, if I take my cursor and go down, there's nothing to the left for me to measure it to, right? So in that case, I'm gonna switch to the higher time frame. Still nothing. If I keep going left, still nothing, right? So guess what I gotta do? Gotta go to the higher time frame, right? And I gotta go to the left. I don't get anything from the downside movement. Let's zoom in a little bit. So if TP1 is broken, there's nothing until I can come all the way over here. Guess what? That's my next target right here. That's TP2. Then I got to take the same approach, right? What's in this area over here that I could use as a target, right? I'm gonna zoom in over here a little more and see if there's anything else that I might want to consider. I got a couple options, right? I can go down to this wick right here, or I can use this area right here, this little area right here, but nothing really in this area. But if I keep going to the left, you can see these highs, they rejected over here. So this will be a good target for TP3 right here. And that's pretty much all you want to do in this case. Once you got your TP set, all right, just check. This will be a 40 pip move. If this goes here, that's cool. That's not that unrealistic on this pair. If it buys, you'll get a 25 pip move. And then you should be good on this. So we'll come back here. And go to the 15-minute or the hour And this will be what your setup looks like on this, where if it breaks and closes above this price, you're going to take the buy. If it breaks and closes below this sell, you're going to take the sell. And that's it. That's what it's meant. Doesn't matter the time frame we trading. If you're looking for targets, yes, because if you're going to be looking at like the 5 minute, your targets on your trades might be a lot smaller. If you box everything up from the 15 minute, you might be getting 15-minute targets, right? Because you might not realize that you need to come up to the higher time frame to get better targets. So my suggestion is don't typically box up your charts below the 15-minute. I would stick with 15-minute and above. And you're really going to take a top-down analysis. You're going to start from the daily or the weekly, and you're going to go through this approach. And then on another note, I have done under Kim's session, I'm gonna give y'all some recommendations under here. Under Kim's sessions, watch these three. We really watch all 4 of these. Watch all 4 of these, but these 3 in particular. These are going to tell you how to find your zones and how to look for her entries, right? And then after you watch those, then you need to come into the Discord. And then you need to watch this video. Right here. This is a session I did a while back. It's called The Good, the Bad, and the Ugly. And this is talking about how to take entries, and it gives you examples of what are good entries, what are bad entries, even better, even more in depth than I just went just now. So the whole session is about entries. What are good entries? What are bad entries? And okay. Yeah, this is going to give you a bunch of examples. So take this and then just watch this. Give me a like and a subscribe if you want to. I'm cool. I'm cool. I'm good for it. All right. So these videos by Kim, and then that session that I showed you that I did. Okay. I got a couple more questions. I'm gonna wait for Khalil to come back to answer that. Going over the GU setup. And then Thomas asked about divergence. Can I go over navigating in trading view? I sure can. I sure can. Okay, so this is going to be so for Thomas, right? So divergence is let's get the technical definition of it. And I'll tell you what I think. Divergence is looking for indicators. It is the use of your chart versus an indicator. You're going to be looking for price going in to give you early signals that price may be at the end of a run or at a weak point in the chart, right? It may be coming to a reversal point or something that's telling you that your indicator is giving you a signal that price is going in one direction and price is going in the opposite direction to show you early signs that you may have reached the end, right? And so the textbook definition of this is here. Divergence can occur between the price of an asset and almost any technical or fundamental indicator or data. Though divergence is typically used by technical traders when price is moving in the opposite direction of a technical indicator, right? This is Investopedia, investopedia.com. You can definitely, this is like, this will give you everything you're looking for as far as terms. And the main thing, the main indicator people use for divergence is RSI and MACD. You can use stochastics, that kind of stuff. Those are like the main ones that you'll see that people use. And as far as divergence goes, let me find a good area that let's go to 4 hour. That's probably better.
And Cory, the second part of that question would be, is it useful to even have that indicator, or that's just another tool?
Just another tool.
Okay.
Just another tool. So we'll look at this little area right here, right? In this area right here, you can see that we made from here to here. Well, let's look at this. So from here to here, RSI was showing us up signals, right? That we should be going up from here to here, right? So basically, once this low was made from here to here. But if we look at these prices right here, we have a divergence between the highs on the RSI and the highs on the chart pricing, right? We're making lower highs all while RSI is making higher lows, implying that it's becoming or reaching the area where we could see a sell from, and we did. So in this case, divergence was correct. As we got to the point where we were making these highs, and this is important with RSI because you got three main levels on the chart on the RSI that you have to pay attention to: the 70, the 50, and the 30, right? Of course, 30 and below, that's a big oversold signal. 70 and above is a big overbought signal. 50% is a retracement level or a level where you could be possibly in consolidation. But in this case, we had gone from the highs all the way over here to the low, and now we had retraced back up to 50%, which gave us this divergence right here and right here, and then gave us a signal that this could be selling off, right? Another area is here, right? Similar to what we just showed you, but an opposite approach, right? We had been making higher highs right here, right? Throughout this area, right? And divergence is telling us from this point to this point that this is showing we're going up, but the momentum shifted. And you can see on the RSI, we're making lower highs on RSI. So we had another divergence between price action and RSI to show you, right? So that's a good example right there. I used to use MACD a lot when I first started trading. And you can use this a similar approach, right? You can use divergence in a similar approach. Make this a little bigger. Okay, so with RSI, I mean MACD, the way you would look at this is as we made these highs, the momentum shift, and they made the momentum within the MACD started making lower highs, and it even flipped from positive to negative. So this central number, the middle number is 0. You want to see momentum swinging and continuing to make highs on the momentum if you're in an uptrend. But in this case, we started to make lower highs right here while we were making higher highs. That's a sign that this trend has reached an end right here, because now we're making lower highs on it. And we've even crossed over the 0 mark to turn bearish, early signs that it's bearish, because now the divergence is saying we're going up, but we're failing. Momentum is dwindling off. And now I'm starting to reach a level of resistance, and negative divergence is happening right here. And then eventually we get this drop. You can also use this. I think this is stochastic. I don't know. Let me see which one is this. I don't remember what this tool is, what these lines are, but you can use these. I do know you can use the crossover as a signal for entry or exit as well, right? You get the divergence to the downside. You have it reaching a certain level, a low over here, and it holds. You see this cross, blue cross the red or orange, and then you get your entry. So that's a way you can use it. But you know, I hope that answered your question. Hope that answered the question.
Yes, thank you.
This for you, Thomas. So yeah, Investopedia, you guys need to kind of just live in here, right? You can just throw in whatever you want to in here. Let's see, correlation. I probably spelled that wrong. So, okay. Positive versus inverse correlation. What are some terms that we use? Break, retest. Let's see. Breakout. Let's look that up. Breakout. Search results here, but we want to look at terms, right? Mitigation. Mitigation. System of creative logic, ensure the logic. Yeah, so you know, definitely spend some time on here. I definitely did when I first started trading. Like I really spent a lot of time on Investopedia, just learning, especially when I was learning how to trade stocks. This is you gotta you gotta really focus on that learning aspect. So then let me see if Khalil back on. You back on here, buddy. No. Somebody said they were in GA. Get rid of these.
Yes. You said Genese?
Somebody said they were. You're in GA, right?
I'm in GA for a long time.
You're in GA. Somebody was asking me that.
It's a buy.
Somebody asked me about it this morning in the session.
Yeah, I thought it was going well. There's no well. To feel the imbalance.
I mean, it's at a good spot.
We believe there's nothing more powerful in your
That
work.
he could
That's why we
trade
have
for.
all our work up with our Champion AC Iron Clad guarantees. Champion AC guarantees
Got to this area, reject.
from overpaying for comfort.
I think that's like the 618 or something too.
If you looking at this move from here to here, you just bounced off the 70. So I mean, you look good. I don't know what news is going on right now. I don't know what news is going on that could change. Let's see. You got 930 private capital expenditure, GA, GBP AUD. You got retail sales tomorrow at 930. Friday.
Oh yeah, it's doing some wicking right now. It just weak me out. I was like 12 pills down.
What was your entry? What was your entry?
What was I into? Let me see. I entered at 1.89197. But my this 897. I'm sorry, 1.89197.
For a buy.
Yeah.
And what was the stop loss?
I just put it on the 15-minute low, which was what am I talking low? 1.88978. Don't ask me why. I moved it. It just wicked me out.
I mean, you good on this.
It just wicked me out though.
How you moving stop loss?
I don't, because it was just getting on my nerve. I've been in it for a long time. And I was like, man, is it gonna go? Is it gonna go?
As long as you didn't break below these lows, you should be good to stay in that trade. You got even high.
I know. Because it broke above the cloud and above the 50 a long time ago. I thought it was gonna keep going, then it went down. On and on and on.
No, you were good on this. You were good on this. Even on the lower time frame, this the 1 hour, 15 minutes.
I'm talking about it. Yes, took me out too.
When this got taken out right here, and you see price above this, then you should be good. I mean, you can still get back in there if you wanted to.
Okay, so my broker look funny because it looked like this long width, but I'm on Orlando on let me see. It is well, it don't look like that. But I guess okay. Yeah, I'll try it again. So should I right now or just do you think it's gonna pull down some more?
It might. Like I said, you need to pay attention to these two lows right here. And as long as it don't,
Okay, so I should wait till close above that high.
you can do that.
No.
You can do that. Or I mean, I feel like you didn't need to get out this trade though.
I know I did. That fucking nigga went all the way down. I'm like, what?
At worst case, you could have used this little 19 pip stop loss. But I mean, you weren't in that much drawdown. So you could at least try to get to this high or this high, or back to the 50%.
That's what I was hoping. It was just taking forever. I'm like, man.
Yeah.
As soon as you go the wrong way, it takes forever.
Yeah.
Okay. All right. So I'm just wait till break that high. Let me get it.
Yeah. Yeah.
All right. Thank you.
No problem. Khalil asked me about this GU trade. So this GU setup is, I was looking for a price to trade to this order block over here and reject. It just got to it. I used the pending order. So this got me pulled in over here on this trade. Now, I'm okay with this as long as it doesn't close above this high right here, because this is the top of the order block, and I'm okay with it coming up here. I'm even okay with getting in another trade right at this little breaker right here, little zone right here. So I got another pending order right here, and I got pulled in on a pending order right here. So I'm looking at this area to reject from right here primarily. And if I get into any drawdown, at most, I would be looking at 40 on the first order, which I'll take the L on that one. And then over here, 19 on this one. So that's what I'm looking at on this. But this is all going to depend on this guy, dollar, if it's going to reject or not. If dollar is at a little order block right here, and then a little area right here where it could reject. If dollar can hold this right here and just give me a bounce up, I'll be looking for dollar to at least come back up here to the weekly right here, at least. And then EU, same thing, right? I put the entry at this order block right here at 50%, and it wicked me in. So I will be willing to let this go into drawdown. It's not going to be that much. This one's only like an 11 pip stop loss, 12 pip stop loss. And then, as long as it doesn't break and close above this wick right here, I'll stay in this trade. But because I put a pending order in, when I put pending orders in, I don't put big trades in. 2.5, 0.25 at the most on that, 0.25 at the most. So if I lose this trade at 40 pips, that's $100 trade. That ain't nothing. That ain't nothing. Yeah, I'm in EU as well. I got pulled in GU and EU. And if you see my drawing, right, I was expecting price to push up from this area to here or here and then reject. That's what this means. That's what this little drawing means. So push up from this area right here, this low right here, and two main areas it could reject from was right here. And if it doesn't reject, this will be the next area it reject from. If not, that means that I have to take this L and I got to reevaluate my setup. That's all that means. But I'm taking the trade at a really high probability area so that it could turn at. So got a order block, rejection right here where it broke from once. That's the little breaker right here. You got whole number over here, that's 70, the 50 area right around this area. And then on dollar just got to order block around this area right here. So it's a lot of things lining up. Now, if dollar just keep going, then I have to take those L's. If dollar just keep going, which it can, because this is a target for dollar to come to down here. And if that's the case, EU and GU, I'll take the L on those. But I'm okay with that because I'm already in the buy from the bottom. So this buy is already going. I'm trying to get early on the sell, you know, so I can just let this go. So that's how we look at that. That's how we look at that. And then I didn't really like none of these trades. I mean, I know you guys got in them. I'm not sure who took them. I did end up taking gold, but I didn't get in when everybody else got in. So gold's up pretty decent over here. What is this? So about 50, 60 pips. Okay. Similar to what I showed y'all earlier, where candle with long wick is traded through right here. Rebalance right here. Now, I don't know if this is giving me signs that this might push up through this, but I'm at least looking to get to the body right here on this. And I'm almost there. So the body will be around 1795. And if it wants to reject, then I'll go ahead and take another piece off of this and then close that out or just leave a partial in. But this is at break even, so I'm not worried about that. And if you guys took the trade that Brian called, I think he called it around 88 or 80, 88 or 90, I think. And then Anastasia called one around there too. So you're pretty good on this. You're pretty good on this. But you use this indicator daily, weekly, monthly openings, because you'll learn that the opening price for these pairs and stuff, they're like magnets. They are magnets. They always want to search for the opening price, because for the weekly, for the monthly, for the year. And they always do that because that determines where price is over whatever that time frame is, right? You always hear people on the news talk about, Dow Jones is up on the day. Dow Jones is positive for the week. Dow Jones is negative for the week. It's S&P 500 is positive for the day, for the week, for the month, and these levels right here are what they're referring to. So and that's what big banks and major hedge funds and stuff like that, they don't really pay attention to what goes on in this hour or 15 minutes. They want to know what's happening for the day, for the week, for the month, for the year, right? They want to know that they are up for the week right now. I'm down, price has been trading down all this time right here, but to them, if they're positive for the week because they got in trades long ago, they're good, right? Are we positive for the day? Right now, we are still positive for the day. We're trading slightly above on gold for the day, right? That's what that's what you want to pay attention to. And then even this, right? Now, if I'm right here and I'm pushing down, right? And if I'm priced and I got down this low, wouldn't you think that it would try to come down and tap the weekly at least one time before it pushed up, right? Or if you're looking at another chart, like right here, right? Even your GA trade, right? Your GA trade, it tapped off for the monthly and then pushed back down, right? So is it gonna stay above the daily and come back and trade through the monthly? Because if it does that, it's gonna be positive again for the month. So you want to pay attention to these levels because they, like I said, they act as instant. They act as instant magnets. I think I was telling Anna about this too. So, full attention. If you can, please explain entries. I'm still having a hard time with that. Yeah, we went over that. I'm not sure if you heard it, but let me just resend this to you. I think this is a better. I don't want to go through it all over again, but watch under Kim's favorites. These 3, these 4. And then after you watch that, watch this video. If you can't find it, it's right here under resources, trading resources. You just got to scroll up and then study this chart right here. Let's go into this chart a little bit. This, like I said, examples of good examples, bad examples, and everything, what you would look for. So just kind of study this right here, and then I think you'll catch on. Oops.
What's the indicator again for the monthly and the daily?
Daily, weekly, monthly opens.
Thank you.
And it's just gonna paint these levels on the chart for you. The daily, the monthly, the weekly up here. And I think the yearly somewhere. Where are you at? The yearly right here. because these are going to be really, 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 really strong levels, right? You look at this yearly, right? Natural support resistance, right? Broke out, bounced off of these 1, 2, 3 times. It ain't came back. Like imagine catching a buy off of this yearly, right? You catch a buy off this yearly, you up 12, you up 1300, 13,000 pips almost. So you ain't got to trade a lot, you know, catch a buy off for the monthly, which that's what y'all trying to do now on GA. You up 192 pips, 200 pips, right? And then you reverse, right? So right now, GA is sitting right on the monthly. Sitting right on the monthly. And
Does that automatically change for you, like the daily, like for next every day or every month, or you have to change it?
it automatically gives you that. As the
Oh,
month opens, this is gonna move. As the week opens, this is gonna move.
okay.
It gives you the current month, current week, current day, and current year. Now, if you wanted to just note, like what I used to do is I used to draw it myself, right? I would just go in, all right, this is the weekly. And I would just annotate this right here like this. That's how I would used to do. But and I would have like weekly prices all over my chart because, you know, sometimes they might need to come back to this, you know. So I would want to know that, right? But I don't do it a lot anymore. Let me see. Let me look at this SPX chart. I think I still got some of that stuff on here. Nah, I guess I took it off. But yeah, I used to draw it up myself every time, but I don't know if this is the same chart or not. Okay, yeah. So let me get rid of this. Okay, it looks like I kind of went through all the questions. Kind of went through all the questions already.
Cory,
Check one thing. Okay.
this rebalance can happen and any time, right? It's after a long time also, right?
Say that again.
That rebalance, that
Yeah, it can happen anytime.
means third candle can come after long time also, right?
Yeah. Yeah.
And suppose means one bullish wick, right, upside, and one engulfing is covering that, and then I got rebalance, but I get enter, but again it is going in wick direction, right? So
Sometimes, yeah, sometimes it'll happen. You give me you have an example.
yeah,
What pair?
SPX.
SPX.
15 minute on 20. I'm telling
15 minute.
you. Yeah, I'll give you time. 20 August.
20 August. Okay.
12, 12 noon candle.
12 noon candle. Okay. Right here.
Yeah,
Good example. Here's the body.
yeah,
Here's the wick.
yeah,
Bullish engulfing trade through it.
yeah.
Price comes down in this area,
Mhm.
and you can start looking to buy once it's inside of here. And you trade all the way back down to the body, but it holds
Mhm.
and it continues up from here. Yeah, that's a good example. The only thing I would have just kind of been leery about this buy because it's sitting at this area it could have rejected from. Now it continued,
Mhm.
but just be careful with these highs though. But like this is a good example of a
I was just
sign,
going back and testing that.
huh?
I was just going back and testing that I got this one. So
Yeah, yeah, yeah.
I
This is a good sign that when you see these two together,
Mhm.
this is a good sign that it's going to continue to go up,
So if I want to stack, so where will I stack exactly?
right? At
This.
an area like this over here. This is exactly a good area. So if you're going to use this to stack,
Mhm.
you just don't use the same size order. You're going to use a smaller order right here.
Yeah,
As you stack, like you want to try to get in at the bottom. And as you stack on the way up, your orders are going to be smaller and smaller, but you're still going
yeah,
to be stacking.
yeah,
Just like right here. Like let's say you got in down here
yeah.
on this low, right?
Mhm.
Uh say you got in on this move right here. That's your big boy, right?
Yeah.
Then let's say you see this happen. Wick, engulf and trade through,
Mhm.
right?
Mhm.
Extend this out. There's the body.
Mhm.
There's the high.
Mhm.
Stack right here. Somewhere I'll even give the drawdown on that, right? You put it at the entry at the high. Your stop loss is below the low of the candle that rebalance, right?
Yeah. Low of that candle.
There's your another stack, right? We keep going. We don't get nothing else over here. Nothing over here. Nothing, nothing. Nothing. Till we get here. Can we use this? Stop loss is this or this, whichever one. If you use the low, the body,
Body.
entry right here.
Mhm.
You can use this as a stop loss or this.
Mhm.
You could have added two stacks here. And you still gonna keep this going. Um, don't see nothing else for the buy. Then you got one right here. Right here. To here. You can do here. Now, the only problem with this is the candle stop loss you would need is right here for this.
Long.
Because this one
Mhm.
extended so far, you know, this is a really strong candle.
Yeah, I saw that. I think we did something that day it happened. I mean, I did personally.
Yeah,
Mhm.
same thing right here.
Mhm.
You got to use a big stop loss, but you see, you didn't have to even get hit, right? For the first entry, you would have had to use this stop loss. For the second entry, you could have used this with right here, but I mean, just to be on the safe side, if you were gonna do this, you would need to use that.
Got it.
But you can see that, you know, it puts you at risk for a lot of drawdown if it goes down.
Mhm.
So then the last spot I see is this to this right here.
This one. Yeah.
Last spot. It's at the high. Stop loss, right? Have to be here. You would have maybe had one at the low. The body.
Mhm.
The body never got triggered, but the one at the top did. And that would have been it. And then you would have been sideways after that.
Yeah.
So,
Got it. Got it. Thank you.
but that's what I would have, you know, would have probably did. But yeah, that's how you want to look at it.
Mhm.
That's how you look at it.
And for this, like this swing kind of, as this is going up and you are getting higher low, just change your stop loss, right?
Mm-hmm.
To
Mm-hmm.
take the trade, right?
Yeah, like if you get here,
Mm-hmm.
once you see this higher low made and you see this high get taken out, move your stop loss here.
Mm-hmm.
Then you see this high get made, you see this higher low get made, wait till this stop loss, this high get taken out. Over here, you can move your stop loss right there.
Mm-hmm.
Same thing, right? If you get in down here,
Mm-hmm.
once you see this high get taken out right here,
Mm-hmm.
then it make a higher low and then trade above this high,
Mm-hmm.
move your stop loss
Thank you.
underneath this area right here.
Yeah. Okay. Got it.
This high get taken out right here,
Mm-hmm.
make a new high,
Yeah.
make a new low, take out this high,
Mm-hmm.
you move your stop loss from here to here.
Okay. Okay. One thing I got. After taking that higher high, then I need to change that, right?
After this,
Yeah. When
you
it
want a new high made,
mm-hmm.
you want a new low made, then you want this high taken out.
Taken out. Okay.
Once you see this get taken out, you can move your stop loss up under the lowest higher low. If this was a sell, you would let's say you got in right here.
Mm-hmm.
We have this low. You
Yeah.
see this low get taken out right here.
Mm-hmm.
You see we got a new low.
Mm-hmm.
We got this higher low.
Mm-hmm.
I mean lower high.
Mm-hmm.
and then this low taken out right here. Now you can move your stop loss
Stop
in,
loss. Okay.
right?
Yeah.
Now you got this low. You see, we make a lower high.
Yeah.
We want to look for this low to get taken out.
Yeah.
It never does, right? So if you move your stop loss before that, you're gonna either get stop loss above here
Mm-hmm.
or back up here. Which one you would want to do is up to you. You
Okay.
know,
Mm-hmm.
it's up to you at that point.
Mm-hmm. Got it. Okay. Okay. Thank you.
No problem. Khalil said, do you wait until your first entries are in profit / break even before you stack? If you don't, if not, don't you increase the risk? Of course. Yeah, of course. I'm not getting in, I'm not stacking if I'm not in profit. And only way I'll add on to a losing trade, like let's say I got in at this high and I wanted to break and retest this, right? And I got in with a small entry, but I'm expecting it to come back down here, right? I'll keep this one open, add on right here, right? That, and then that'll be my stack because I got two already. And then I would add on again, you know, somewhere else down the line when I see something else that I'm looking for. Or I just won't add on at all. I'll just ride with what I got.
Hey, Cory, just to be clear, so before you add on, you at least put your first one and break even?
Like I said, it depends, right? So there's situations where I will add on to a trade, right? If we're talking about SPX, right? I was looking for this buy right here. And I was basing it off of this order block right here. I might come in and put a small order block, a small entry right here. This will be the first entry. And then once I see it trade down into this order block, I'll have the bigger entry somewhere like lower or lower here, right? And for this entry, I don't care if this go in the drawdown. I just wanted to make sure that if it came down and bounced off of the high of the order block, that I can get pulled in just in case it does that. This is my bigger entry. And I'm looking to say, as long as it don't close below this low, I'll be good to stay in this trade. So I'm either gonna have another order right here, or I'm just gonna market execute once I see it get down to this point. Then that's two orders already in. I'm already stacked. Sometimes I'll even throw another buy stop above this area. And once it gets down here and just let it pull me in too. So I might have three in. I won't stack until I see something like this right here take place over here. I didn't do it this time, but usually if I'm looking for a stack, I'm looking for moves that are going to be off of a higher time frame. This setup that I took over here that I'm still in was based off of a daily and a 4-hour setup. So if I'm going to be taking a trade off of a daily or 4-hour setup, then I'm going to be a little more comfortable with stacking on those trades because I'm expecting it to keep trending in that direction. Got me?
Cool. Got it. Appreciate it.
And usually this order right here at the top is not going to be that big. So if I go in the drawdown right here, and I'm using this low right here. Maybe, I'm in drawdown for 160 pips, which I can deal with because I didn't put a big order right here. Over here is a bigger trade. If I just put the order right here, I'm in drawdown 90 pips. That's still okay because I'm looking for at least to get back to this high on this trade, or at least to get back to this low or this area right here. That's still 5-1, but I'm still in this, right? I'm still in this. And I don't have to do nothing to this trade. And this trade, undo. I don't have to touch this trade. So 15-1, and it's up. It's up 1,460 pips. I can just chill. And I really didn't have no drawdown on this, but it's all good. So let me grab this. Amanda, no, she's not on anymore. I think I missed that one. Let me see. I think I got everybody question. I think I got everybody question. Okay. I'll drop the link for this for you guys. Let me get the details. And I'll send this to you guys real quick before we get off. If you want the recording. So no more questions, right? No more questions before I stop it.